Welcome to the Daily Exchange, guys. I'm here with Louis Aboud from Wyre Capital, head of Wyre Capital, that is. And we're talking about all things about funds and OTC and exchange. Welcome, Louis, to the show.
Thank you. Pleasure to be here.
Yeah. We're in this old school hotel here. It's kind of nice, but we're talking about new school stuff. Tell us first, just start with, tell us about Wyre and what it's all about.
So Wyre's had a long history in the crypto space, founded in 2013 by a fellow Aussie, Mike Dunworth, who's been on the show before. And it's really started off as like a cryptocurrency wallet and merchant processor, which is kind of like what BitPay does, right? If people want to spend their crypto at like a retail store or something, then it was really about doing that kind of point of sale transaction. In like 2014, they pivoted the business towards using crypto for international money transfer, which is kind of like what Ripple talks about doing with XRP, except we were mostly using Bitcoin and actually did it. So that's kind of like you buy crypto in the US and then you sell it in China to basically move from USD into CNY, and then you pay it out to whoever wants it in China. It's like a really fast and capital efficient way of moving money around. And that kind of gave us a global infrastructure around, fiat money, liquidity and regulatory licensing for money transfer, and like compliance capability, all the stuff you get with like a payments business. And what we've done really in the last 12 months or so is productized all that infrastructure. And now we offer it to crypto companies and projects so they can add fiat on-ramps into their product. So it's like the easiest way to get a new user who doesn't own any crypto, who just wants to use the application to basically take the money in their bank account or on their debit card and load it straight into the application, fully integrated into the application's user interface.
Okay. And you also run a fund, a capital fund, purely crypto focused. Do you want to tell everyone a little bit about that?
Yeah, so we launched Wyre Capital in February of 2018, which was interesting timing for launching a fund, considering the market has fallen probably about 80%, depending on how you measure it since then. But really, it was about, we had a payments business, and it makes money kind of clipping the ticket on transactions. And this is obviously an industry where the capital growth in the assets that you're trading can be astronomical, right? So we really wanted to be able to, one, bet on those assets as a company, but do it in like a professionally managed way. Two is like invest in other companies in the space that are either complementary to our business, or we just think that they're really solid as like an individual company that's building crypto products, and really to kind of capture the synergies that we get from being a key partner to a lot of different projects in the space, right? So we really have our kind of finger on the pulse in terms of how everybody's coming to market, what their kind of commercial game plan is, because for a lot of these companies, we're a major part of that commercial game plan. So, it's about kind of utilizing all of this flow of information that we get to kind of bet on the industry as a whole.
Okay, really cool. And maybe, Louis, do you want to tell a little about yourself?
Yeah, so I have had an interest in cryptocurrency since probably about early 2014, back when it was just Bitcoin, really. At that time, I was at an equities hedge fund in Sydney. So I was looking at a lot of technology, software companies, was really sort of focused on that part of the market. But my sort of hobby, as it were, was crypto. And I would be constantly in communication with Mike, who's the CEO of Wyre. He was like my go-to crypto expert. And yeah, like as the amount of activity in the industry grew, so did my interest. And I got to about midway through 2017 and I was telling Mike, we've got to launch a fund. And he was like, well, come over and do it with us. And here I am.
Awesome. Yeah. So tell us, what sort of the makeup of the fund? Can you talk us through that? So
yeah, I mean, when you create an investment fund, you have what's called a mandate, which says, basically, it tells all of your investors, external investors give you money to then invest in the market. That kind of defines what you can buy. And the mandate really is loosely defined in terms of like the legal definition of what you can buy, because in crypto you've got this constant debate: is it a security, is it a currency, is it a commodity, all this kind of thing, right? So in terms of what we can invest in, it's basically anything that can or will exist on a public blockchain. So that includes like Bitcoin and Ether, and it can include like utility tokens like a Maker or a ZRX, or all of these ERC20 tokens that live on Ethereum, or it can actually be equity in a business, as long as that business has a view towards tokenizing their equity and having that trade on all of these new kind of security token platforms that are just starting to launch now. So really we can invest in anything in the space as long as it's going to be liquid kind of within the next year or so. We're not looking to make venture bets that take 10 to 15 years to become liquid.
Okay.
Yeah.
And what's sort of your approach, to picking coins?
So it really depends on the kind of coin, right? Like the reality is that Bitcoin and like the value proposition of Bitcoin is extremely different to, a token like MKR or, a business that they're trying to build an exchange or something like that, right? So what you look for really depends on the kind of asset. And the weird thing about this space is, it's not like, if you're in like a hedge fund that just invests in equities like companies, right? They're all like the same kind of thing that you look at in a similar way, right? They try and generate cash flow. You sort of figure out what the competitive landscape is and how good the technology is and how good the management is. With something like Bitcoin, there are elements of that, but really you're looking at kind of more macro factors, right? For like the currency pieces, right? So you got like Bitcoin or Monero or Zcash. Really it's about, how liquid they are, on-chain transaction activity. So the good thing about a lot of these networks is that it costs money to do a transaction. And why I say that's good is because it means when you look at the number of transactions happening, that people are spending money to make that happen, right? If you go into something like EOS, where it's free to do a transaction, then people can spam the network. It doesn't cost them anything. So looking at the transaction data isn't that useful. But anywhere where it costs money to do a transaction, the transaction volume per day is like the most solid fundamental indicator from my point of view. And so if you look at Bitcoin, that's been pretty consistently growing for a long period of time, despite the fact that the market and the price of Bitcoin's fallen 50% in like the last 4 months. The amount of transaction activity has actually gone up about 80 or 100% in that time, right? So then you start seeing that kind of decoupling of price and fundamentals. For like the smaller, earlier stage projects, it's like very team oriented. It's kind of like venture capital style, what are the chances of these people being able to execute on a plan that they're, in step 1 of 1,000, right? There's not much track record in terms of that particular project. There might not even be that much usage or adoption. The thing might not have even launched yet. So that kind of comes down to the nitty gritty of the team and the feasibility of what they're trying to do. A lot of crypto projects say they're going to do really grandiose things that are just totally infeasible, right? So I think picking a realistic goal that solves a genuine commercial problem, like a pain point for a particular industry or particular type of consumer, that's really where you want to be, solving real problems that are achievable, and preferably having some kind of technology that can be used for more and more things going forward.
Okay. Now you have a particular view on MakerDAO. Do you want to tell everyone a little bit about that?
Yeah, so I've noticed I've name dropped it a few times in this conversation already, but it's one of our happiest and largest investments. So it's actually the first thing that we ever bought in the fund. And what it is basically a decentralized stablecoin. And what that basically is they have this asset, or it's like a currency called DAI, right? DAI. And that, its whole purpose is to be worth $1 per coin, right? And so, obviously one of the things that people bring up when they think about cryptocurrencies as currencies that people use as a medium of exchange or a unit of account is that they're way too volatile, right? Nobody wants to spend money that's changing value 10% or 20% in a day. So what DAI basically is a system for creating a stable coin that doesn't have, it's not just money in a bank account, right? So there are two types of stable coins in the market at the moment. I should explain that first, right? There are the fiat stable coins. Yeah. So like USDC, or the biggest one's Tether, right? And what all that is just money in a bank account, and a vague promise that if you try and get the money out of the bank account and give the issuer back their coins, they'll give you the money. And that's why it's worth $1. Whereas MakerDAO basically takes Ether and in the future other assets, and it kind of uses it as collateral, kind of like how the gold standard used to work, right? Yes. So dollars used to be backed by gold. If you took them to the bank, then you could get, whatever it was, a few carats of gold or whatever for your dollar. And that's why people thought dollars had value, because they were redeemable for an asset backing, which was in gold. DAI is kind of like that, but it uses Ether. And in the future, all of these different assets that might live on Ethereum will find its way into the collateral backing of DAI, like in the MakerDAO system. You might be thinking, or your audience might be thinking, why would you invest in a stablecoin if it's just going to be worth $1? And the answer is, there are two tokens. There's MKR, which is basically the governance and like risk management token. So anybody that owns that controls all the complicated risk properties of the system. But it also accrues a stability fee, right? And this all gets pretty complicated pretty quickly. But basically, MKR will automatically get purchased and burnt, right? i.e. eliminated from the supply, kind of like a share buyback. There's like an interest rate on DAI, right? So I can take $10,000 worth of Ether, put it into a MakerDAO, they call it a CDP, and out of that I'll get $5,000 worth of DAI, right? And on that $5,000 I effectively pay interest, and that interest goes to the MKR holders through this token burning process.
Right. So you sort of make an interest, I guess, dividends on this.
Yeah, I mean, it's not like a dividend in the sense that, when you own a share and you get paid a dividend, that's like a check in the mail, right? It's like cash flow separate to the asset.
Yep.
The way MakerDAO works is more like a share buyback. So in order to close your CDP and get your collateral back, like the Ether or like the gold that you put behind your dollar, in order to get that back after you've created the stablecoin, you need to pay this interest. And you pay the interest by basically buying MKR and then sending it to a Ethereum address where it's effectively disappears, right? And that's kind of like a share buyback, because a share buyback is when a company says, we've got this money in the bank, we're going to buy these shares and then remove them from like the float. So the earnings per share goes up because there are fewer shares.
Yes.
It's sort of like that, basically.
So you're reducing the supply and therefore...
And there's constant demand for more buybacks, right? So you got lower, like supply goes down over time and the, buybacks continue, right? So
is there a fixed issuance of Maker, or does it have inflation as well?
There's the part of the thing that the Maker holders are getting compensated for by when they receive this buyback, or like the economic benefit of that buyback, part of what they're getting paid for is that the MKR holders are like the buyers of last resort in this system. So, if you're putting Ether as like the collateral backing for $1, the problem with using Ether is that it's highly volatile, right? The price of Ether has fallen by like over 90% in the last 12 months. So that raises the question, what happens when the value of the collateral is worth less than $1, right? And basically, the person that created the DAI either has to put more Ether in, kind of like a margin call, right? Or they get liquidated out of this position, right? But if the value of the collateral falls too low and the whole system is under collateralized, the MakerDAO system basically mints new MKR to pay the DAI holders or whoever's owed money in the system, basically. Wow. So there is a risk if you hold MKR that it just gets inflated in this situation where, say, if Ether crashed to $1 in 5 minutes, basically this is what would happen, right? The MKR would be created out of thin air to pay back the people that are owed money. So that's the risk, and that's the way in which inflation can occur.
Okay. And so I guess why do you like this for the fund? Like, why long term do you see it as a key holding?
There's a few different things. One is that, like, really it is absolutely necessary for a whole bunch of different applications on Ethereum to be viable, right? So, there are a few things that are already launched on Ethereum that we can talk about as examples. One would be Orgo, right? So the prediction market, a lot of people are familiar with that. It's kind of like you can bet on outcomes, whether it's a sport or like political, who wins the next election or whatever. Now, if you bet on that outcome, but your bet is denominated in Ether or any other volatile asset, that bet on who's going to win the Super Bowl basically becomes a bet on the price of Ether, right? Because if Ether goes down, then you can win the bet and then it's worth still not much, right? Mm-hmm. So all of those kind of prediction market or derivative things, you want to use a stablecoin as the base asset. For the other financial applications that exist on Ethereum, who would want to take out a loan denominated in Bitcoin, right? Like if you took out a loan denominated in Bitcoin in 2013, the real value of that loan today would be worth a lot more. You effectively owe the person more in US dollar terms, right? Yes. So if you're taking out loans, or if it's like insurance or any kind of financial product, you want to have the base currency in a stable coin. And DAI is the best it's like the only real functioning decentralized stable coin out there. Okay. The other thing is that there already is a massive market for this, right? The float of Tether, like there's like $2 billion worth of Tether out there. Tether was created just so people could, if they're trading on a cryptocurrency exchange that doesn't have access to fiat money, right? Binance was a good example of that up until very recently when they've started to integrate fiat money payments. But all of their trading was against Tether, right? Or Bitcoin. If you want to risk off when you're trading, i.e. go from owning lots of volatile crypto to owning not so volatile crypto, people would sell their Bitcoin into Tether, right? And that's already a hugely proven use case, and it's great for like exchange arbitrage because you can send it between exchanges really quickly to take advantage of price differences. And DAI is like basically the next generation of that, right? So it's got a proven market in the short term and massive opportunity in the long term.
Okay. Now you wrote quite an incredible paper about 0x.
That's very kind. Yeah.
I thought it was really good, and particularly about the governance of it.
Yep.
And its tokenomics in particular.
Yep.
Do you want to tell the community here a little bit about that? And I think you made sort of two really key suggestions, or I think there were a few others, but there were really two around how the token should be sort of managed.
So, I mean, the problem with 0x, now, ZRX, the token sale, the ICO, was actually the only ICO that I ever participated in, right? So I was like a supporter and believer in the project. I'm still a supporter of the team, and I think they're doing good work, and like the technology that they're building is valuable and will be increasingly valuable going forward. But the token, which is what's funded their whole existence, right? They've kind of perhaps not given it the attention that it deserves, and not given their token holders, the attention that they deserve, right? What it does at the moment is basically nothing. The original pitch for the ZRX token was that fees would have to be paid, trading fees would have to be paid in ZRX. So anybody that wants to trade on 0x relayer, i.e. like an exchange running on the protocol, they would have to own a bit of this token to pay fees, right? Now, for a few complicated reasons, that's not really the case now. So the vast majority of trading activity on the protocol, doesn't involve the token, right? And what the company talks about doing with the token is basically making it a governance token, where the holders of the token get to vote on protocol upgrades, and it's kind of like the thing that like Tezos or some of these
Decred.
other projects, Decred, like it's that kind of model, right? Now, to me, I can see why that might be a good thing in terms of like people being able to vote on protocol upgrades, but to me, like how that actually captures value and if that accrues value to the token at all, to me really is unclear and doubtful, right? And in that post, basically what I was saying is that, back then I think that the total amount of ZRX that existed, the market cap, so to speak, of ZRX was like $500 million US, right? And the biggest problem on 0x exchanges was that they had no liquidity. So I was basically saying they should use the token to incentivize market makers, right? So if you're posting liquidity onto the platform to basically allow people to trade without paying huge spreads or getting a really bad price, then you would get rewarded with some token, right? And if you're like a market taker, part of your trading fee basically gets burnt. So that kind of the same thing we're talking about with MKR, it just disappears, right?
Yes.
Because you can do that with cryptocurrencies. It's an interesting feature to permanently reduce or even temporarily reduce the supply. So it's kind of like a burn and mint scheme where tokens would be minted to pay market makers and then burnt by market takers. And you'd manage the kind of maths of the whole situation. So the supply slowly decreases, right? So you get a decreasing supply and much greater liquidity, right? Now, they've come out with certain things to try and incentivize liquidity since then. And, frankly, they're not that inspiring from my point of view. But I did hear rumors just the other day that, and this is all totally unconfirmed, I probably shouldn't even say it, but that they are actually considering using the token now as some kind of market making perspective. I doubt they'll give me credit for it, but I think they're slowly seeing the light.
Okay, let's talk about the markets right now.
Yep.
I guess we're in a bit of we're looking at a crypto winter. We've been talking about this all about the show of recent.
Yep.
But today there's been some interesting news about JP Morgan launching its own coin.
Yes.
What's your sort of view on that and how it affects the market?
So I would say it doesn't affect the market, the crypto markets at all per se. I think it's an interesting development, right? It's, from the information that we have today, this only happened today, right? I've read a couple of articles on it, but from the information we have today, it's really hard to get a granular understanding of how they actually want to use the coin. They say they're going to use it for international payments or like as some kind of like rapid settlement currency, right? Using a USD coin for international payments, there's something missing in this equation because generally international payments involve converting currency into a foreign currency, right? Which is not possible with this product because the product is USD only on a private blockchain. I'd say a few things. One is that they built it on their own blockchain, right? So it's not going to be a system that a consortium of banks use likely, right? I think it's more likely that a whole bunch of banks get together and say, we're going to build this system together. And if there are any economics generated by it, we'll share in those, right? That's how Visa was created. I think I can presume, I could be wrong, that that's what SWIFT effectively is. For a lot of these payment networks, the banks are the shareholders, right? They basically own all the infrastructure. And I feel like if there's some kind of interbank blockchain for like rapid movement of USD, that it'll probably be a group effort and it won't just be something that JP Morgan builds for its clients. In terms of the impact for like crypto in general, this isn't really a new thing. I'd say it's not really going to have any impact. If they bring their JP Morgan coin, which I think they actually call it JPM Coin, which I probably could have paid someone to come up with a better name for that. But, if they bring that onto Ethereum or some kind of public blockchain, then it starts to become more interesting from my point of view because it means that anybody else that's interacting with those ecosystems can leverage it, right? It means they don't have to use Tether or, USDC or any of these other coins that really, Coinbase and Circle might be reputable in the cryptocurrency space, but they're not reputable in any kind of global financial sense, right? Bringing some kind of big bank-backed coin into I call it the fiat coin space, all these stable coins that are backed by USD, bringing those onto Ethereum is a value add for the space, right? Because there's very low counterparty risk with that coin, right? Because JP Morgan's behind it and they have however many hundreds of billions in assets, and all things said, are pretty sound financially. Short-term impact, though, there's not much. I mean, people talk about it being bearish for Ripple, right? Because Ripple, XRP is supposed to be this thing that they use for international payments, but just from what I've read, it's hard to be like, okay, well, what JP Morgan's doing directly attacks the Ripple vertical. I'm not really a fan of what Ripple says they're going to do with XRP and XRapid, which is like the bridge currency model, right? Which is what we did with Bitcoin. They're trying to do it with XRP. That whole model, I think, and the way they're approaching it is slightly flawed. I don't think that's what JP Morgan's trying to do. So I noticed, like, on Twitter, which is where, all the crypto minds like to argue with each other, they're all saying this is super bearish for Ripple and XRP. And like, it probably is slightly bearish on balance, but I think it's too early to infer that they're going after the same market and customers.
So you said, just picking up on that, so just a slight tangent, but
yeah.
Why are you not a fan of XRP?
So a few things, right? From an investor's point of view, you always have to say, even if you really love an asset, you have to say, well, what's the price at the moment, right? Like, Amazon, I think, is a fantastic company, right? But if it's trading at $5,000 a share, I don't want to buy any because it's overvalued. So at the first step with looking at XRP is what's the current valuation? And the reality is that it's depending on how you look at it, like the second largest cryptocurrency in terms of market cap. Does it deserve that? I would say almost certainly not. There are a few reasons why I'm not a big fan of it. One is that the supply dynamics, right? Ripple, the company, owns the shitloads of this thing, right? A worrying amount, and they sell, a large amount into the market every year to fund their operations. Now, if you think about how Ripple works as a business, they basically have the software business where they write software and sell it to banks, right? And then they have XRapid and the XRP thing, right? The software business, I don't know, I haven't seen the financials. I suspect that loses money, right? And then what happens with XRP is they just sell it to fund the software business. Now, that means that they're a big company, they employ lots of people, they got to pay their salaries. They're probably not getting that much revenue from the software business. They're constantly selling XRP to fund themselves, right? The other thing is that what they talk about using XRP for, i.e. a bridge currency, it's never going to attract, it's not a big addressable market, almost by definition, right? So what they're saying is that for doing certain FX payments, it can be more efficient rather than going from, say, USD into Mexican peso. They're saying it can be more efficient to go from USD into XRP and then selling that XRP for Mexican peso. Now, it's certainly not the case with Mexican peso because that's a highly liquid pair. A lot of USD is traded for Mexican peso. If you're doing a lot of volume, you're not paying much at all. The fees on a cryptocurrency exchange that trades XRP is going to be multiples of the spread that you pay doing that direct translation. So XRP and XRapid is not for that market. If you're going from like two smaller currencies like Mexican peso into Filipino peso, there might not actually really be a direct currency pair, right? And in that case, XRP might be more efficient if they've got really good market making in both currencies, right? But the point is that the only reason why XRP is more efficient in that case is because barely anybody is wanting to do that FX transfer. Otherwise, the direct payment would be more liquid and the rates, the cost of doing that transfer would be lower. So they effectively have to target smaller markets in order for their product to make sense. And that basically means I don't think it can ever really be worth 10, 20, $100 billion. So yeah, like the flawed business model around XRP plus the fact that they're constantly selling it to fund their operations. And the fact that most of the people that have bought it have bought into this meme where Ripple is this company, they're partnered with every bank and every bank's going to use XRP. That frankly is like nonsense, right? The business that Ripple has selling software to banks is totally distinct from XRapid, which is the thing that is powered on XRP, right? The software business might actually turn out to be viable, right? And maybe that reduces the selling of XRP. But, the fact that Ripple partners might use RippleNet to settle transactions, those are all denominated in fiat currency. That's not XRP, right? So I think having a large number of misinformed retail investors holding it, plus these other dynamics we talked about, really doesn't paint a good picture. And then the fact that it's really, really overvalued, basically in my mind, makes it uninvestable and probably a short more than something that you would buy, right? Like I see over the long term, they either change the business model drastically and what they're doing with XRP drastically, or change the nature of XRP drastically, or the thing becomes worthless over a long enough time horizon.
Louis, so just talking about the market in general, do you think we've hit the bottom?
It's tough. I mean, the reality is that in a lot of ways, the fundamentals are really starting to improve, right? You've got on-chain transaction activity for Bitcoin is going up really strongly, right? Like the rate of growth is stronger than it has ever been, right? And this is a total decoupling from price. You've also got lots of traditional financial intermediaries entering the space. Intercontinental Exchange, which runs the New York Stock Exchange. You've got Fidelity, Goldman's and a whole bunch of other banks probably trading the futures and might end up trading the underlying assets. All of that kind of thing, NASDAQ are going to start trading, and the Swiss Stock Exchange are going to have a digital token trading platform. All those traditional financial institutions building infrastructure is positive. The on-chain activity for Bitcoin is positive. The things that I see in like the decentralized finance or open finance space for Ethereum is positive. I'd say what's going on in South America in terms of cryptocurrency adoption is really encouraging. And the fact that all these things are happening, in a context of a down market, it gives me a lot more confidence that we're either near the bottom or we've seen it already. But the thing is with crypto markets, obviously, is that most of the assets don't have accepted fundamental properties. You're not like, well, this stock is now trading on a PE of 10, it must be cheap, right? It just doesn't work like that. The markets are way too immature. So that means the market could halve again, and I wouldn't be surprised at all, right? It's one of the reasons why we run a long-short fund, is so we can insulate ourselves from these downturns. Often you'll get a period of consolidation where not much happens, and then the market just picks a direction and moves 50%. And you're like, well, why did that happen? People say, oh, is this news or that news? And the reality is it's just like a whole bunch of traders pushing it in either direction. And, trading on technicals and things like that, all that stuff still dominates the market. So, yeah, I'd say we're near the bottom, but if we halve again, don't be too surprised. Yeah.
I think we've seen a recent, ICOs have sort of gotten real quiet of recent, and these new projects raising money. But then, what we've seen with the BitTorrent token is this, you might even say it's a strange anomaly, perhaps, or not. Where the prices come out and it's maintained potentially, and there seems to be a logical use case there of
it's a fascinating thing.
I'm interested in your view there. For the BitTorrent token, do you think that has a long-term potential?
So here's the thing, right? There are a lot of decent ideas in the crypto space that are pushed forward by people that might not have the best intentions, right? And that's something that you definitely have to keep your eye out for. Now, the history with this BitTorrent token is, so there was the Tron ICO, right? And Tron was this plagiarized white paper that was, headed up by, the former Ripple guy that, basically I think was taking advantage of the ICO boom and the amount of easy money coming into the space. And that actually turned out to be hugely successful in terms of the price movement, right? And they've basically, that was a Ethereum token to start, but now they've got their own network, and that's where the Tron token lives. The value of Tron, went up so far that they had billions of dollars basically in cash, right? Well, in Tron tokens, and presumably they sold some for cash. They acquired BitTorrent, the company, for like whatever it was, $220 million. Now, BitTorrent is open source software. That company doesn't really have any revenue as far as I can tell. It might have some, but it's not like a software company that charges all its users to use the application. it's open source software. Like most people that use BitTorrent don't use the BitTorrent client, right? They use uTorrent or whatever, all these other apps, right, that live on the BitTorrent protocol. So Tron, probably not the best actors in the space, bought BitTorrent and then did this BitTorrent ICO, right? Now, really it just seems like opportunistic kind of, you could call it a scam in a way, right? Now, there is value behind having tokenized incentives within BitTorrent, right? One of the former executives of BitTorrent that left after it got acquired by Tron, probably along with a whole lot of other people, said that, a token model could make sense basically in incentivizing, basically you can pay for a faster connection, right? Now, I mean, coming from Australia, we love to pirate things in Australia. It's like we're overrepresented in pirating and have relatively slow internet. Maybe people would pay for that. I'm not so sure. I think one of the reasons why people pirate is because they don't want to pay for things. So there's maybe something counterintuitive about inserting some kind of paying model into a free system that attracts, freeloaders, basically. As for like the ICO, it was like one of the first ICOs to be done on the Binance platform. I mean, it was always going to work, right? BitTorrent, like it's massive, millions of people use it. It's just, that thing can't not go up on day one when it starts trading, provided they price it reasonably. So I'm not surprised at the way it's traded. I think it was up like 7x when it first started trading. And the way they've structured it, I'm not an expert on it, but like the Tron token holders get airdropped BitTorrent tokens over like a crazy long period, which is to incentivize people to buy and hold Tron tokens, right? So there's like, it's not like I wouldn't go so far as to call it a Ponzi, right? But it's not sound, right? They want to put this BitTorrent token and this whole incentive model for BitTorrent on the Tron network. And everybody that's since left BitTorrent said that it's not going to work, it's not scalable enough, they have no idea the scale of usage and transactions that could occur. And yeah, it's a marketing thing, basically.
Okay.
Yeah.
In the next, I guess sort of two last questions. In the next sort of up and coming, what do you think the market's going to do? Where's your
I think the volatility will reduce probably over the next 6 to 12 months, and we'll just see a longer period of consolidation. After every crypto bear market, there's a flat bit in the middle before the next bull market. I'd say we're probably about to see the flat bit. And, not financial advice, but, I think that's when you really start looking at what's going on with the fundamentals of all these things. If they are improving and on a really strong trajectory during that period of consolidation, then, maybe you can think about making some moves. But, lots of things can still happen to massively move the market in either direction. There's still big regulatory risks, around what constitutes a security with respect to all these tokens that are being issued. All that stuff would have an outsized impact on Ethereum and a lot of these other smart contracts platforms. You've got the possibility of more traditional investment products like ETFs getting approved. I wrote an article about that, which people can look up about basically why that's unlikely to happen in the short term. But things can always change. Basically, when the markets look more sound, an ETF can get approved, and that can have a really big impact on the market. But yeah, I'd say we're probably in for a relative time of calm for crypto markets. That is right. If we do find new lows, I'd expect that to be the bottom. The next leg down, if we do have one, I think would be the bottom. It's really just a feel thing though, right? Mm-hmm. It's really hard to point to any particular metric and say, well, this is why I think that. It's just like the momentum in this industry is really strong. So if prices keep going down, then you can start to see value.
Okay. And lastly, we ask everyone on the show Louis, the price of Bitcoin in New Year's Eve 2019. This is not financial advice. This is just purely your opinion. But we sort of, we've been doing this for everyone on the show, and we'll tally this all together. But I wanted to get your view in US dollars.
Yeah, I'm really not a fan of point in time predictions, but I would say by then we start going up against, we might be at 5 or 6K. Yeah.
Okay, awesome. Well, Louis, thank you so much for joining us. Guys, do check out, Louis got some great articles on the Wyre blog. You can follow their Twitter here. And we'll thank you again for joining us on the show. Awesome stuff.
Pleasure.
All right, guys, do subscribe and do follow us. We'll see you guys later. Catch up.